Good afternoon, traders, and welcome back to our Hot Stocks Outlook for January 4th, 2019. First Hot Stocks Outlook of the year. Hope you're all having a great start to the year and great opportunities to cover as usual here. We've got a lot of price action. We're going to take a look at Tesla, Amazon, and Apple from where you options traders, some highly liquid options markets there. But we also have Simon Property Group, so a lot going on in the realty, real estate sector and the higher yielding stocks, and also Wendy's here for a opportunity there in the fast food sector of the market. But let's go ahead and start here with Tesla Motors. And really the point of these Hot Stocks Outlooks is to help traders understand how these indicators can help you make better trading decisions in the market. So regardless of the instrument you trade, right, whether you're just trading the stock or trading options, you want to have that guide that regardless of, volatile price action around holidays, earnings reports, Fed announcements, is consistently accurate at producing these forward-looking forecasts. So here in shares of Tesla, you'll see against these daily bars, so each one of these bars being a full trading day in the market, you see that there is a black line and a blue line. Now, the black line that you see is just a regular simple moving average, so an extremely common technical indicator. Everyone knows what the 10 or 15 day simple moving average is, but it's a great barometer of where prices have been over a given period of time. But we don't want to look at that lagging indicator of a predicted moving average. We want to look forward and say, okay, well, where are prices looking to go next? And that's where these tools found within VantagePoint come into play. So notice that this value here for the simple moving average is 360, 286, but our predicted moving average. So what's actually going on here is the technology is utilizing what's called neural networks, type of artificial intelligence, and it's looking at other related markets, things like the S&P 500 dollar index, ETF groups, other motor companies, other tech stocks that are known to share and influence and drive shares of Tesla Motor. So to create that value, that blue predicted moving average value, it's actually using predictive data generated by the technology and letting us know, okay, well, where are prices moving forward? Turning this lagging indicator into a leading indicator. So when that blue line crosses below the black line, you know that the trend is down. You want to look to go short, buy some put options, sell some calls, but very straightforward. And certainly when you see all the weakness in the market, it's a good time to look for short opportunities. So if you look at the S&P 500, you see the same thing, blue line below the black line, market in a downtrend. Now, as long as that blue line remains below the black line, the trend is still down, but you also have, you see this indicator at the bottom, can either be a red or a green configuration. And we also have a predicted high and low range that you're provided for each and every trading day. So here's what's so interesting about this is it says, okay, well, Tesla's going into a new downtrend. Well, where do I want to look to buy those put options or sell calls or short the shares? Well, you'll use that guide of the predicted highs and lows. So you see our 48-hour indicator of the neural index at the bottom. This is looking 48 hours ahead, 2 trading days at a time, letting you know strength or weakness in the market. And then you've got this predicted high and low range to help guide you as those shares move forward. We talked about this last week where we got this move lower and you need to decide, okay, where do I want to look to short the market? Well, at or near these predicted highs, short in the upper half of this range and target the move to the downside. You see again here, hitting this predicted low, getting a big decline lower. Now here we got that big move really in all stocks, market starting to bounce here and you see this neural index coming up to a 1 or a green configuration. And you see that strength over the subsequent 48-hour periods. But the thing here is, well, where's our predicted moving average? You see, still to the downside. So when you understand, hey, I've gone and shorted, pretty early up at these levels up here, trail the market down, but expect some strength coming into the market over this period. So you can improve your price, short at higher levels, short at predicted highs here, but you never get that crossover. And so, look, this isn't a time to actually be going and taking a long position or aggressively covering my shorts. Hold on to the trend and you see we get that gap and more weakness still with that neural index and things getting weaker. So, it's all about using these market conditions to adapt to the changing conditions, because when you get into a market, say with Simon Property Group, 3 weeks ago or 4 weeks ago, maybe a different picture when you get to a more recent, last week in the price action, and you want to make those adjustments and determinations here. So here in Simon Property Group and a lot of the real estate, higher yielding apartment investment companies, things like this, coming very bearish here through the midpoint in December. You see this crossover to the downside, neural index at a 0, and it's the same logic. Okay, well, use these tools that we're given here, predicted highs and lows, neural index, to determine, okay, well, for my particular trading style. Maybe you're a day trader, maybe you're trading weekly options, maybe you're trading longer term trend trades, but you understand, hey, there's a great point to short. Here's a great point to cover. Here's a great point to short. I mean, coming in and you're really only in the configuration of shorting from predicted highs because that predicted moving average is still suggesting, look, the trend is down. And you see here this neural index, how accurate this is. You've got all this weakness saying, hey, there's weakness there over these 48-hour periods, remain short, no problems there. But here, hey, expect that strength. And you see you get that strength coming into the market, but the trend hasn't changed, right? Your predicted moving average is still short. You wouldn't be looking to get long, but possibly cover your position, make some adjustments, and improve your overall position here. Shares of Amazon, so very exciting company here, obviously, for traders and highly liquid options markets. But you want to make those good short-term determinations about what is going on in the price action. What should I be doing for my trading strategy? Well, here's where the crossover comes through and says Amazon's now in a downtrend. Look to short the shares. You see you get a little bit of a bounce here, these 48-hour windows where you get some strength, some higher highs, and some bullish price action, but the trend is still very much to the downside. No reason on earth you'd be getting long here, and therefore looking to short from predicted highs, cover at predicted lows. I mean, that's just the configuration you're in. As you're a trend trader, you're going to hold out for this longer move. You see more of these opportunities to come in and short. Now, we get this bounce here to the upside and things start moving up, but not all stocks have recovered the same way. And this is really my point of, all stocks are going to be doing different things. And as a trader, you want to be looking at that time frame and saying, okay, well, what should I be doing for my trading here? And you see, well, neural index at a red, we come to a green. We actually get this crossover, which suggests, okay, well, really look to cover those short positions, right? And if you're covering short positions or even looking to go long, well, you're actually going to be getting filled at the open here. So as a day trader trying to get long, they get long, target the predicted highs, a really nice move there. But also if you're a longer term trend trader, you can enter into this market all the way at here, lock your stops in. If the market continues up, great. But you've got a lot of options here. As a option trader who may have sold some puts or sold some calls or bought some puts rather, you really want to cover on this day now that the trend is up. So really great opportunity to take a look at, okay, what's coming through the software? Where are the odds? Are we expected to have some strength over the 48-hour period, weakness? What's the current trend? And make those trading decisions off of those levels, and you're going to be doing a much better job taking advantage of those market participants who you're trading against, right? Here in shares of Wendy's, very straightforward move here, but again, the accuracy of the indicators is really the key here of knowing that, look, you want to be in a downward trend here. All the crossovers from really the past couple of weeks, we've just been highlighting short opportunities. There's no reason to be long because we see so much of this sort of activity all throughout the market. But here in Wendy's, we want to go ahead and short the shares, cross over to the downside. Neural index very bearish. We have one little glitch here where it comes up to a bullish configuration, but huge separation between these predicted moving averages and actual moving averages. We level out here and run sideways. But let's look at these predicted highs and lows and say, okay, well, how would we be trading this? Well, we'd be shorting here, shorting here, shorting here, shorting here, shorting here, shorting here, possibly taking, covering those positions at these predicted lows if you're a shorter term trader. And trend traders very easily just, getting short at the beginning of this move. And, until that blue line crosses above the black line, you want to maintain that position. So the point here is that, we have a lot of these big moves in the market, and this is an 11% decline. But as a day trader, maybe you make a few percent here on this day, a couple percent here, and you're, bouncing around the market to different things. Or you're a trend trader and maybe you're in this for this 11% decline, but understand also that, recently there's a good area to get better prices, short, cover at predicted lows, short at predicted highs, do some trade management when you have these conflicts, but don't give up on, the reason you're in the market. If you're a trend trader, as long as that blue line is below the black line, the trend is still down, ride that, almost 12% move to the downside there and $2 per share, just in, 18 days, really almost a month time, really less than a month on the calendar. And lastly here, shares of Apple. So we actually covered this last week, and Apple in the news today, but just very clearly here, you see these crossovers to the downside, no reason to get long. this market, but this has been going on all the way since October when the S&P and all of these stocks originally started to get weak. So really since the first week October, you've just been looking for shorts, using the software here to short markets, cover those shorts in line with, again, your trading style or the instrument you use. Maybe you trade options. But it's all the same. You got to get the direction right. You got to limit your risk here. And you see Apple just getting absolutely killed and then just, falling off a cliff more recently. But let's bring up those predicted highs and lows. And you can see how, clearly you've wanted to short Apple for the past, 2 months. Well, where do you want to do that? Well, all at these predicted highs are going to provide you with great levels to come in and execute that trading strategy and do it in an efficient enough way where you're getting good price action, don't have to run huge stops, and can really stay in line with that overall trading strategy that you're trying to execute by staying in line with these predictive forecasts. So really great opportunity here in Apple. I know we dropped another 10% or so far, but already down 29% since all of this weakness came through at the first week of October there. So with all that covered, guys, have a great rest of the trading week. Have a great trading year. We'll obviously have 51 or so more weeks left in our Hot Stocks Outlook for 2019. So have a great rest of your trading week. Thanks again. Once again, this has been our Hot Stocks Outlook for January 4th, 2019. Best of luck. Have a great week, and bye for now.